This is the time of year when we unveil many of those targets. So take us through what you think is in store for the S&P 500 in 2024.
Thanks, Tom. It was great to see you last week, and it's great to be on the show here this morning. So we think that 2024 is going to be sort of a different setup in the markets than what we saw in 2023. Dom, last year we were talking about a hop, a drop, and a pop, a little play on Dr. Seuss. And we think for 2024, this is going to look more like what we call an HLTR, which is a high-level trading range. And we think that equities will continue to see the rally that started in the November timeframe extend into December and extend a little bit into 2024, the first quarter specifically, as we continue to see interest rates check back from where they were at that 5% level. As that plays out, we think we're going to see the equity markets push up, get back to those old highs, and then push through it a little bit, and then ultimately consolidate for probably about 5 to 6 months. And that's traditionally, Dom, what you see in an election year is a market that sort of rallies, enters a trading range, and then doesn't finally push higher, ultimately until you get through the election. But we do think the market will close for the highs of the year in 2024, and we set a price objective out there of 50-50 for 2024. Given the uncertainty out there, we think that fits very nicely together. But at the end of the day, we still think it's going to be driven by tech, industrials, and services, just more mid and small cap, as we're starting to see the financial sector really starting to show signs of improvement, Dom.
Craig, those are the sectors you think will help power that 50-50 target price for the end of 2024. What sectors do you think are going to be the drags, the ones that kind of really underperform that big technology and kind of cyclical trade that you're talking about?
Yeah, when we go back and we look at all this relative strength work that we've done for years here at Piper Sandler, right now it shows the utilities are looking weak, the consumer staples are looking weak, and the comm media is sort of mixed at this point in time. And Dom, one of the other areas that's weak that we think has potential recovery opportunities would be healthcare. It's really done poorly in the last couple of months in here, and we think that could be an area that we could see signs of improvement. But the biggest improvement and the biggest surprise is coming from financials at this point in time. And if we do see the Fed finally sort of back off of their rate hiking cycle that they've been in, the yield curve starts to become more normal sloping, that will ultimately power the financial sector. And that is really one of the most important things we need to see happen for the breadth of this market to improve and for equities to move higher ultimately in 2024.
All right. Tech and financials doing some of the heavy lifting there. Craig, let's take us through some stock picks. What do you think from a stock-specific perspective quickly?
Yeah, very, very quickly. We think Train in the industrials, ticker TT, looks pretty constructive, just starting to break out. Also look at Fiserv, ticker FI. Skechers, SKX is another constructive looking one. And if you look inside the financials, I'd point out Fifth Third Bancorp, JP Morgan are two of the other names that look very constructive, along with Truist Financial.